good afternoon from London. Welcome to the RANsquawk Weekly Wrap. Instead of answering some of the questions to the desk this week, I'm going to be talking about the EU summit, given its market precedence and the focus that has come on upon this summit over the last few trading sessions. So this was meant to be the summit to end all summits, to create a definitive solution to the Eurozone crisis. We had some commentators leading into the summit saying there will be no second chance if no permanent solution could be found. Taking a look then at the draft summit conclusions which were leaked last night, another set of promises and suggestions that we've had from the previous summits, which again, if they were enacted in a whole in their entirety immediately, we may get some sort of framework together. However, the likelihood of that happening does seem quite remote, starting then with the fiscal compact, which seemed to have been agreed by the 26 Euro nations, excluding the UK, who are trying to protect their own financial system by not ratifying any of these treaties. More on that in a second. Will the 26 nations be able to ratify them in their domestic parliaments in a speedy and expedited manner? We've already had the experts on the wires regarding the Irish referendum. They will definitely have to hold a national referendum in their own country, and they're hoping to conclude that by March on the updated treaty amendments. But will all other 25 nations be able to do that in time? Will they actually, or will the domestic people in fact agree to these referendums, agree to these treaty changes? Particularly for the larger countries, will the French people be happy for their budget to be set somewhere outside of Paris, perhaps Brussels or Berlin, especially given their own quirks in each individual country, for example the French pension laws and the benefits over there in France? Will this be applicable to every single country under one centralised place? Looking next then to the ESM, 500 billion euros has been set, and there was some talk of giving it a banking licence in order to go to the ECB with collateral and therefore help out those stressed euro nations, but that has been swiftly denied by Germany, the banking licence and any possible concurrency with the EFSF. So it does seem to be a standalone 500 billion euros for the ESM. Is this enough? Taking that into account, 500 billion euros will probably help Italy for a year, so around 12 months. Is that enough for the rest of the Eurozone to rely upon? Taking a look at the markets today, there have been generally quite positive, especially the financial sector. There does seem to be some relief coming out from these Eurozone conclusions, but in practice, will they actually be able to sustain the indebted nations, considering the size of the Italian bond market, the third largest in the world? Will those 500 billion euros be enough? And then finally, on the Eurobonds, there's been some positive notes sounded on Eurobonds from the market participants, especially from the EU Commission side, Juncker, Barroso, Van Rompuy. But just think about the German contribution. They have to agree to these Eurobonds, and they will be pretty much the European underwriter for any shared debt issuance in the Eurozone, and I just cannot see Germany agreeing to that, given that their own domestic auctions in recent times have also suffered from poor take-up, given that last month we had the poor Bund auction almost coming in with a 39% retention rate. How would this affect any possible joint debt governance or joint debt issuance, given that we're also having German, Greek, Portuguese, all the PIGS nations rolled into one? So then, on reflection, it does seem to be that we will be looking further ahead for any potential full conclusions coming out of this conference. We've got the rest of today to see if they can't pull anything out the bag. But taking a deeper look into these initial conclusions, there does seem to be quite a way to go before we get a full end to the Eurozone crisis. Not forgetting we've also had the EBA stress test results showing a shortfall of around 115 to 114 billion euros across the Eurozone. And we'll also have to see those banks coming out of the mire and coming into some interbank liquidity in the near term in order to foresee some growth in the Eurozone and a solution to this crisis. Well, that's enough from me today. Hope you've had a good trading week into the close of this year, and we'll see you next week before we shut up shop at RANsquawk for the end of the year. Hope you have a great trading day for the rest of today, and hope to see you again quickly on Monday. But that's enough from me. Have yourselves a great weekend.